So Dollar Tree should be doing great, right? I mean, people are trading down. Maybe not so much. We'll have a breakdown for you right after this on the Rebel's Edge. Bang! Penny for your thoughts, Pete. Maybe $1. Maybe $1.
Maybe a Dollar Tree. Oh, wait a minute. That's not so good.
Yeah, that's kind of like what the Bears have been doing right now. We'll have to get to that later in the show, but a lot of free agent moves. This is finally the big day, right, Pete?
Oh, yeah, they can do it. Supposedly it begins at 4 o'clock, although, let's be honest. They give you that couple of days where you can actually do everything other than sign the paperwork. So we kind of got a pretty good idea. It's going to be a really, really wild one at 4 o'clock today Eastern time for sure.
Yeah, but most of them, like Kirk Cousins, Saquon Barkley, let's see. Gosh, couple of big signings that are just hitting right now, too. Well, like Pete said, though, I can't say signings. I can say commitments.
Yeah.
Because the signings can't officially happen till 4. Anyway, he's Pete Najarian, folks. I'm Jon Najarian. We thank you for joining us here on the Rebel's Edge. March 13th, 2024. We cover macro minute, fantastic futures, a few stocks, and some sports thrown in. And we kind of give you our opinion on all of that. So with no further ado, Pete, let's start off with the macro minute. And I'm going to say Jay Powell identified something that kind of is something Pete's been talking about, because he said the price of insurance has been going up, up, up. And he said that's kind of a hidden inflationary measure, Pete, that people might not pay enough attention to. You pay attention to it, and I do, from the insurance of portfolios, which we'll call the VIX. But also there's the insurance of your home, of your life, of your car, all those sorts of things that are up over 22%. And that's really hurting regular Americans right now.
By the way, since you hit that spot, I can tell you this. Yesterday, we saw some unusual options in one of the fantastic 7 or whatever you want to call these guys. It's 4, John, just so you know, but I'll throw AIG into the mix there, by the way. And that thing is absolutely ripping. Take a look at that chart. Take a look at it year to date, the last 3 months, however you want to frame it out. It's a pretty interesting chart that's really been ripping to the upside. My one thing about macro, though, for myself, John, is the semiconductors. They've had an incredible run to the upside, right? On March 7th, they hit 239 on the SMH, and that's a big ETF. So that was a pretty amazing number. They've kind of pulled back since, though, John, and today we're sitting there at about 222, down about 2% today. I'm not saying it's over. I'm not saying there's too much pressure, but it's certainly influencing the market, particularly the NASDAQ side today.
Well, you know what comes next, folks. Fantastic futures.
Fantastic futures.
There he goes. Well, Pete, I'm wondering if you think we might see something in Bitcoin and so forth that rivals what we saw in NVIDIA last week, when we saw that massive drop very quickly. I don't think it shook everybody out, but it certainly scared a lot of folks that got in late, because it dropped $90, as we said, in a little over 30 minutes. Bitcoin was over 73,000 today, and it hasn't fallen out of bed, Pete, but Bitcoin futures are definitely moving to the downside rather than the upside right here. In fact, even though they're still up $1,000 on the day, we had a big drop off yesterday, and we're seeing a little bit more of it today. We're beneath 72.5.
What's moving to the upside today, John, is copper again. And it's interesting because if you just look at the last month, the run in copper, it was 372. Now it's over 4. Last time it was over 4, go back to April of 2023. Copper it's a combination of a couple of things, a lot like cocoa, John, where it's really about demand. But the other side of it also is the supply disruptions that have been there as well. That combination has got copper absolutely ripping to the upside. I don't know how high it can actually get, but when you consider the green side of it, that from the supply side, that's a big number. And they just continue to have issues just like they do with cocoa. There's a lot of things going on that are causing it not to be able to get enough for what they want right now. It's a big run, and I think there's kind of like a squeeze going on right now for copper as well.
Well, we always try to give you guys a little look into the futures market. Pete, would you be taking profits or going after more copper here?
I'd probably go after. Here's why. We also see a little bit of activity today in FCX, Freeport Max. So give you a little bit of something there as well. We're seeing that. We hadn't seen a whole lot of that, but the material space is starting to perk up a little bit, John. And I think copper is definitely one of the targets.
Well, as you guys may have noticed, Pete and I did get the blue Hawaiian shirt notice today.
The memo
Jared.
came through clear.
Yeah, Jared sent that one via SMS. All right, let's go now to Dollar Tree, Pete. Whoops, nope. I'm skipping right over Williams-Sonoma, which was the big story.
It's a biggie.
Williams-Sonoma's up big, Dollar Tree's down big. But Williams-Sonoma, Pete, I thought the thing you really needed to pay attention to here was the CEO said that they outperformed in 2023 despite one of the slowest housing markets in several decades. I think that's one of the keys, that even when things are slow with housing in terms of turnover of homes and people buying new homes or existing homes and so forth, these guys are still printing it, Pete. And because of that, they're increasing the dividend, and people really seem to love this stock again.
And when you say increasing the dividend, it's increasing by 26%. That's a nice big move to the upside. When you look at the earnings, they absolutely crushed it, John. They hit a 544. They were looking for 505. You look at revenue, they beat on that. Not by a lot, but they did beat on that as well. I think the most impressive thing is, look where this stock is right now, the rocket ship that it's gone running to the upside. And because of the fact that they've had such great numbers, you look at the PE right now, John, it's trading at a 16. So this is still an inexpensive stock. They're absolutely rocking. It's unbelievable. By the way, free cash flow of $1 billion. That seems like a pretty decent number as well. Across the board, Williams-Sonoma has absolutely just outpaced, it seems like, just about everybody. That's why that's part of the Magnificent Seven. Oh, wait,
it's not. So in other words, there are more than 7 stocks that are kind of
really?
driving higher. Yeah, and that chart that Jared had up there, Pete, that's from Rebel Research, folks. That's our tool that does technical analysis. So it does charts like this. It does fundamental analysis, lets you know cash flow and all that kind of stuff. And it does sentiment analysis, letting you know what people on Reddit or Facebook, Instagram, even with the reels and so forth, if somebody had something positive or negative, or X, it would show up on one of those 3 things, and maybe even all 3 at the same time. That's Rebel Research. You can get it for $19 a month, folks. Artificial intelligence, and it lets you take a look at 35,000 stocks. As fast as you can type it in, you get an answer back showing you what that chart looks like, what fundamentals look like, or what the sentiment looks like. And again, it's just marketrebellion.com/research. Mm-hmm. All right, now we get to dive into Dollar Tree. And Dollar Tree missed on holiday quarter sales. I don't want to be an elitist, Pete, and say that I can't remember the last time I shopped at Dollar Tree for Christmas presents, but I never have. But nonetheless, it wasn't just that. It was they're shutting 1,000 stores. And you don't have a big online presence with Dollar Tree. So if you're shutting 1,000 stores, that's going to materially impact your top line and bottom line. And I think that's why people are hitting the exits with both hands.
Yeah, the customer spend was something else they brought up too, John, because they were talking about there was still activity there, but it was what people were willing to spend or able to spend, I guess would probably be the better way to say it. But they completely missed on earnings. They missed on revenue. That's going to be a problem. And oh, by the way, when they put out the guidance, that looked just as bad going forward. And to your point, it's going to be bad, especially because of the fact that they're talking about shuttering those 1,000 stores. Not all of them, but they're talking about 600 in the first half of the year. And then when you look at some of the other entities that they've gobbled up over the last few years, they're having to shutter those as well. So there's there's a lot going on that is very uncomfortable, I would say, for the investors. I don't know that this is one of those names that even if it's down 13, 15%, I don't know necessarily, John, that means, hey, the green, it's time to buy. I don't think that it's time to buy. I think this is one of those that you just no touch, just back away and let somebody else make that move for themselves.
Well, sadly, Pete, that's one of those stocks that was subject to a lot of focus whenever times are really bad. They say people trade down from like Walmart or even Target down to Dollar Tree. But it seems that they're having a lot of trouble putting things on the shelf at the right price, to your point. They might get revenue, but they're not getting as much profit as they expect. And so I guess that's why they're going to close close to 1,000 stores. All right, now let's talk about HUTCHMED. So this is an immunotherapy company. They also have immunological side of their business. So one side's cancer, Pete, and the other side is immune disease and so forth. And they put up some numbers that are pretty interesting today. That's why the stock's up 15%. It is a China-based company, so I'm sure some of you will feel a little different about trading that, just like Pete and I do. But nonetheless, pretty positive report here out of HCM, Pete.
Even beyond that, John, I was taking a look at the numbers, and I think they're almost in a freak show sort of category. The revenue's up 97% versus 2022. Income's up $460 million for 2022. Profit margins are up 12%. I mean, across the board, they are crushing it, and they're getting themselves into a position now where they're actually having positive earnings. All of that goes into a major interesting level right now, I think, for this particular stock. You look at it, John, and stepping away, and you just see everything seems to be lining up pretty at an amazing pace. And they've got a really deep pipeline. So when you put all of that together, I think this is a name you might not want to buy it at this point in time, but you might want to at least put this on the radar, have it up there, and keep an eye on it, because a lot of things are going right now for this particular company. And I'd keep a close eye on it. On some dips, maybe there's an opportunity there.
It's hot today, up better than 15%, folks. Now let's look at BeiGene. I think that's how you pronounce it here, Pete. It's BGNE, and it's based basically where Pete was hanging out down in the Cayman Islands a few weeks ago. Right now, I'm in St. Lucia, Pete, on the cruise that I'm on here with a big mastermind group. But fighting oncology, whether it's leukemia or any of these blood cancers and things, this is something that these guys are involved in. And some of the numbers they reported today were pretty strong, Pete. And that stock up better than 8%. You can see on that chart there where there would be maybe a double top forming here. Mm-hmm. If we break through that, pretty bullish. If we don't, maybe that is overhead resistance that we just keep trying to punch through. So be aware of that. It's one of the reasons, even if Pete and I don't talk technicals that much, we do pay attention to support levels and resistance levels above the market.
Well, and the interesting thing, John, is a real company. I mean, they got some very deep pipeline as well. They're loaded up and they got a great balance sheet. The only thing that concerns me at all is when you look at the cash burn, which we all know when you're in this particular part of the industry, there's going to be a cash burn. But when the cash burn is $1.28 billion, it's a big number. So despite the fact that they've got what looks like a great balance sheet outside of that, I think you just have to be conscious of that. And it'll be interesting because, as you pointed out, if it can break through that level at the top, that really does mean this stock is ready maybe to really get running. So I'd keep a close eye on that. I think that's a great idea, just to keep an eye on where that is, where's that resistance. If it gets through there might be a lot more room to the upside.
Well, this one's one, Pete, that, again, they're in a spot where if they get any kind of a breakthrough, forget about the chart, they're going to break out. Mm-hmm. So depending on how their leukemia treatments and other oncology stuff they're involved in, any of those things work, we all know those are multi-billion-dollar treatments and or even a cure, God bless, would be amazing. And obviously, I think if people are shorting it here, Pete, which they might be against that double top, they might come to regret that in the not too distant future.
That could be a short squeeze type thing, John, under those circumstances. So I would keep an eye on that really close.
Yeah. Well, let's dive into some sports, Pete, because I know at this stage of the show, we always take a look at Pete's red zone and see what's lighting up his either his SMS or his WhatsApp as far as sports questions. So take it away, Pete.
I'm going to run this one by you, John. You look at the NHL, we're talking about the business side of sports, and there's a big push right now by two separate groups wanting Atlanta to get back into the NHL. And one of them is a former NHL player. But there's two different groups that are trying to get Atlanta back. Now, what they had, John, they had the Flames. They went up to Calgary, and they were there from 72 to 80. But they also had the Thrashers from 99 to 2011, and they're gone as well. They went up to Winnipeg. So it's an interesting situation, and I'm curious what you think. If you were the commissioner of the NHL and you wanted to expand, and I think that's a great idea. By the way, the fee is $1 billion, so it's pretty interesting. I didn't realize hockey was at that level at this point in time, but apparently it is. There's an Arizona team that's got an absolute terrible facility. They play in a college facility, John. It's under 5,000 seats and the whole thing, the Arizona Coyotes. That's interesting to me that they've never really addressed this the right way. So that's one side of it. But the other would be, if you were the commissioner, do you think you'd want to go back to a place like Atlanta where you've already had two, call it failures, and give them a shot again? Because obviously there's a lot of dynamics that have changed in Atlanta over the last decade, let's say. So there's a heck of a lot of people there. There's no doubt about that. And there's some arenas that they could build they could be using some of the older arenas while they build it. But do you think that's the best landing spot? I'll give you one that I would at least throw out there as competition. How about Houston? Houston can support just about anything. I mean, you've got the NFL, you've got obviously NBA. There's a lot of different sports that are in certain cities for the right reasons. And I think Houston, for me anyway, I think they would be above Atlanta. But what do you think? I mean, this is the business of sports on this question.
Yeah, I would say, Pete, the reason that he's probably looking at Atlanta is the growth of that city. And a lot of that growth, of course, coming from the north and northeast. Not all, but a lot of it. And where are there a lot of hockey fans? Northeast. Yeah. You know, you look at New York supporting two teams, the Islanders and the Rangers, and the Devils, let's say. So I guess that's three teams. You look at Boston up there. I think a lot of those folks, for tax reasons or other, have moved to Atlanta, among other places. Obviously, Miami, and we all know that. But I think you've got something when you say Houston as well, Pete, but not because of the migration of as many people there from the Northeast and so forth. Atlanta would be a bet on, okay, we've seen a lot of hockey fans that are probably hungry for it, just like Tampa with you, Pete, down in Florida. The Tampa hockey is hot. And why? Because a lot of Midwestern folks moved down to Tampa. I think Atlanta could benefit from that, Pete. I'm not against you with Houston because it's one of the top demographic areas in the whole country in terms of growth. So I think either of those would work. And by the way, if you can't get a better arena or a better situation going in Arizona, I think you could do both. Move one to Atlanta and and give a new franchise granted to Houston, one or the other or both.
I think that makes a lot of sense. All right, so we're going to jump up now to the NFL. I love what our tagline there is, legal tampering, which is exactly what it is, right? They started this, and all of a sudden, all these guys are not signing, but they're kind of lining up, and they're getting everything together. So I wanted to ask you at this point, John, and we already know the signing, so let's just call it what it is. But who's the winners, who's the losers? And I'll start it off. So for my money, the winner right now are the Texans. And the reason I say that is this, John. They've done an absolutely amazing job of holding on to the guys that they really needed to and wanted to hold on to and build this team, and gone out and gotten a couple of players. Here's what they've done. They've just got the running back, Joe Mixon. Now, he's a heck of a running back, has been a very good running back for a while now in the NFL. He's not old, but he's been in the NFL for a while. He's experienced. I think he's a good player who's probably got 2 to 3 years left on his legs. But they also signed 4 cornerbacks. 3 of them were already on the team, but then they added another one. They added a linebacker. They added a safety. But here was the biggie. They ended up going out and getting Danielle Hunter from the Minnesota Vikings. They give him a 2-year deal for $49 million. I'll tell you, that guy's worth every penny of it. Last year, he made $17 million. The only reason he got that high of a number was because of all the incentives per sack when he hit a certain level. He hit it and crushed it. And I think because that defense is already ready to roll, this is a guy who could really do well, because if you've got Anderson from Alabama, the rookie defensive player of the year on one side, and you've got Danielle Hunter on the other, I think you're going to get to the quarterback every once in a while pretty well. So that's why I like that one. The one team that I'm just mystified at, John, because they need everything. They literally need everything, is the New York Jets. You know what they've done? Nothing. I think they may have signed 3 or 4 of existing players type of thing, but when you look across the league and you see what the Vikings have done, or the Bears have done, or Green Bay, or the Vegas, or Seattle, they've all done some pretty big trades already. And you look at the Jets and they've got maybe 3 or 4 transactions. And I realize we're not really there yet, but we are kind of there, because these guys are all going to sign where they're committed to, and they've already got it all worked out. It's just a matter of getting that clock to 4:00 today Eastern. What do you think? Who's crushed it? Who's not?
No doubt Houston has, Pete, because like you say, they're getting a 29-year-old defender that had career numbers last year. Mm-hmm. He had 83 tackles. He had that's tackles for a loss. He had tackles for a loss 23. 23. I mean, you and I have talked about guys that are going to get good free agent money that have like 8. This guy's double digits, and high double digits. Sacks 16.5, and you basically merge that in with what they already had, Pete, and then the signing of, I think his name is Danico Autry, Pete. Mm-hmm. This kid is a beast as well. They probably have one of the scariest pass rushes in all of football now, immediately, right now, and I don't think anybody can prove me wrong, especially, Pete, with San Francisco releasing the big guy in the middle. Yeah. You've still got edge rushers, but now you don't have Armstead, that monster in the middle, because they don't want to pay him, or they can't afford to pay him.
Probably. Yeah. I think they'd love to keep him, but they probably can't afford it. I think you're right about that. They've done a few interesting things, San Francisco. They've been active, but I agree with you. Losing that center is that's pretty rough, because if you're in the middle of that and you've got this guy who's going, what is he about? I think Armstead's about 6'7" or 8. I stood next to him. He's a monster, by the way. So, and weighs about 285, but he's shredded. That's a guy that I think you'd want on your team, and you'd want him in the middle. But if you can't afford him, you can't afford him. Is there anybody out there you can think of, or do you like the Jets call on my part as far as doing nothing? I don't understand it at all.
Yeah, I don't understand it either. And it must just be a combination of cheap and confused, because it's like, where do we start? They need so much. I mean, should they have gotten Derrick Henry, Pete? Did they need that running back, or did the Giants need him after they lose Saquon Barkley? One of those two things seemingly. I mean, I'm happy for Harbaugh, the other Harbaugh, getting Derrick Henry, but man, this one I don't really understand how the Jets couldn't be out there, or the Giants at least taking a good hard look at Henry, who's not an old guy yet. Yeah, he's one of those running backs that's, right there at 30, but I think he could be productive for 2 or 3 more years, Pete. And he keeps himself in phenomenal shape. So again, why didn't the Jets look at that? Why didn't they look at Danielle Hunter? I mean, I don't know.
And these numbers, Danielle's numbers are pretty big, I'll admit that. But some of the numbers, especially with all these running backs switching, from one team to the other, and there's been many, the numbers aren't that huge for running backs. We all know that. But it's funny to me that how aggressive people became going after running backs, and that being a target. And we've seen that for sure. Baltimore needed somebody, And boy, I'll tell you what, I would never have thought that they'd get the opportunity to have Henry, but that guy he will make that offense even scarier, I think, this coming year, John, based upon what the quarterback can and will do. But all of a sudden you still now can put the ball in the hands of a guy who's going to get you 5 to 6 yards. I think that's pretty scary.
Yeah. Lamar Jackson has to be a happy camper, not because he's not going to throw as much, but because he's got a real threat on the ground that opens up the throwing, a very, very serious threat. Because again, if you don't account for that big man, Pete, like you say, it's 5 or 6 yards at a clip, and he's got breakaway speed as well, which we've all seen. All right. Well, thanks for joining us, folks. We always appreciate you sharing anything about the Rebels Edge with your friends. We will be back tomorrow, final Rebels Edge of the week, 1 p.m. Eastern Time. Make sure you check out marketrebellion.com/get started. That's marketrebellion.com/get started for education and subscriptions. We'll see you tomorrow at 1.